Today is Tuesday, October the 25th. This is your Mortgage Minute. I'm Julie Herman, your mortgage gal for life. Let's discuss what is going on with mortgage interest rates and what factors are affecting it in this 1 minute spill. So, first of all, I have talked tremendously about how much the UK is affecting mortgage bonds. And that is coming right back to it because we've had a great mortgage bond week so far this week in the world. And it's because the UK changed their prime minister. So, the prior person that was sitting in that chair, she was actually in that for the lowest term that a prime minister has ever been in there. So now that they've brought in a new prime minister, he is really affecting things in a positive light on the finances, on the world economy, and that's affecting mortgage bonds in a great way. If you are currently under contract, do I suggest that you lock or float? I definitely suggest that if you like the rate that your loan officer is offering you, I would lock it. Listen, it's volatile markets out there. I don't see a recessionary market yet. So, with the volatility, this could also mean that we lose ground on these great mortgage rates that we are seeing right now. So, I would not take that chance. I would lock it if you love it and move on. So definitely the UK is going to affect things. We're going to see how that keeps projecting and trajectorying forward. So we'll check that out later. The Case Shilling report came out, and this is one of those times I want to remind you, you might see headlines that scare you, create fear. The whole purpose of a headline is to sell the new story. So make sure that you take the time to go through the entire story because the Case Shilling report came out and the headlines are reading huge market crashes. Well, yes, we expected home prices month over month to come in with about a 0.5% loss and really came in at 1.3% loss. But let's look at the whole picture. We are still between a 13 to a 15% year over year increase on housing. Double digit appreciation is astronomical. If we look back on 63 years of history, we don't typically see double digit appreciations. So we're still appreciating high, but things are cooling down. And that's because there's going to be a lack of inventory right now. And higher interest rates are definitely cooling down appetite of an everyday buyer. So it's an opportunity. Always look into your housing as options on financing and how this fits into your future retirement plan. Because when the markets are cool, meaning houses are coming down a little bit, it gives you as a buyer a foot up to ask for price modifications, repairs, inspections, gives you an opportunity to ask for maybe some closing costs. But when we do see things shift and they go back to a very strong buyer seller's market, we're going to see buyers are again fighting to get a purchase offer accepted. So look at the whole picture. Year over year gain is still phenomenal. Month over month, it's slowing down, and I anticipate that a little bit until we really see interest rates come down a little bit more. Great week so far as of today for interest rates. If you are buying or even looking at potentially refinancing, it's a really good week so far, but lock it as soon as you get a chance. I'm Julie. I will talk to you next week.